Ondo is growing like crazy. But here's the question. What's the point of holding the Ondo token? So when we talk about the Ondo tokenomics here, as I go through this video, first of all, it's got 4 products. We have USDY. It's a dollar that pays. We also have OUSG. That's where they can enter different funds. You've got Bill Fund, things like this. We also have global markets, tokenized stocks. We also have Perps. That's coming up. It's something new that they announced. So these are the 4 products that you could use on the system. But the question you want to ask yourself is, when these products are being used, how does that value actually pipe back to the Ondo token? So what's the point of holding the Ondo token? If I hold it and I don't hold it, why am I disadvantaged if I don't hold it, if I'm part of this ecosystem? So when you start thinking about that, and you start walking through, you realize the token actually exists only for exit liquidity, largely as I see it right now. Now, if we progress, basically going through this, we could see the allocation breakdown. Let me explain to you why I think it's actually existing just for exit liquidity. Let's start with the ecosystem growth. 52% for ecosystem growth is huge. That's over 50% of the supply is for ecosystem growth. Now remember, ecosystem growth often means a team is going to take those tokens and they can sell them off on the market. They can do whatever to grow the ecosystem. That could be marketing. That could be new airdrops. That could be anything. So you want to keep in mind that this could be very dangerous a lot of times. You have 50% of the supply in ecosystem. That's basically a slush fund for the team to do whatever they want with the tokens. That's a big problem. When we start looking at the protocol development, what's the difference between protocol development and ecosystem fund, like in ecosystem growth? We start looking at these things. So we add all those together, that's about 85% of the supply. Right now, let's go to the private sales. Let's think about this. Almost 13% went to private sales. Okay, now if someone is selling 13% to private sales, that's not a lot. That's not a lot. 10 to 15% is actually pretty normal for investors in private sales, and I think that should be a good norm. Now, the problem is, if you look at this, let's think about how much went to the public, though. So if we go back, let's look at how much the public got. Community access sale, 1.99%, right? So if you divide this, they got about a sixth. They got about a sixth the amount the whole public got. All the people in the public that bought got a sixth of the amount that a small concentrated amount of the investors got. And when you start thinking about this is when this becomes extremely dangerous. And this is also when it becomes easy to see if a team is lopsided in how they structure their token, right? If you were really about the community and about building a product and wanting real holders and stuff, why would you just sell it all to insiders and let everyone dump and have all the tokens distributed all through largely the insiders and all the dumping? Why wouldn't you have it so the public can buy a larger share? Now, the reason why that doesn't happen is because these companies want to raise a lot of money, and that increases the market cap to fully diluted valuation. So it jacks it up really high. Okay, if we look at how the chart looks, before I get into this, just look at how the chart looks real quick. And we'll pull that up. And we'll see, for example, how it looks when you get onto the, right here. This is the Ondo chart right here. Now, if we look at this, we can see how it's looked all the way across time. Goes all the way up, all the way back down, right? But we can see how it's looking here. Things are not really looking the best for how this whole thing is structured, to be honest with you. You see it went all the way up over here, $1.81. This was in December of 2024. Now we're way down over here. That's a massive drawdown. Now here's the thing. During that span of time, Ondo has been doing great, right? But if we pay attention to the vesting terms, these tell you a lot of what you need to know when you start looking into some of these details. Okay, so for example, go back to that. So for example, the vesting terms, at launch, you can see they had 24% was released to the ecosystem growth. Now, a lot of times, this is for airdrop campaigns, big things like this. This is a lot of dumping a lot of times. Also a lot of market makers will dump through the team in this. And you'll have a lot of OTC deals and things like that will happen. Not sure if that happened here. But this is often when I start seeing that, that's what occurs. Protocol development, there was nothing there for 12 months. Private sales, nothing for 12 months, then 36-month lockup. That's pretty normal. The community access sale, 90% at launch, and then we have a 12-month after vest. It's only 10% left. I wouldn't have even done that. Doesn't make any sense, especially when you look at the insiders have 6 times more tokens than the public. And then you have the team has all these tokens. That's your risk. So if that's the case, and you start thinking about the chart I showed, why is the chart down? Why is the chart down if the public only had a small bit of this? Who sold all that? Where'd all that liquidity go? Who's selling all that? And so when you start asking these questions, this is what pops up is, well, why, if we only had a little bit of tokens out in the beginning, are we way down? Why are we way down? Who's selling all that? Who's getting all these tokens and who's dumping all that? Why is that happening? So this is really when you start thinking about how things work behind the scenes, this is why you realize, unless you're an insider, you're exit liquidity. Now, if we look at the unlock curve, This is also not really that unreasonable. Okay, it has a little bit of a steep stretch here, but it's actually not that bad. These unlock curves are pretty normal for what I'm seeing. However, the biggest problem, though, is the amount of tokens that they've unlocked, right? So when you think about this, when I unlock a chunk of supply, what I want to pay attention to is where does that supply go? Okay, so it's not about where the supply unlocks. Okay, so let's say, for example, supply unlocks, the team takes it into the treasury, and then no tokens go anywhere, and they just hold them there. That's a case where, yes, we did technically dilute people because it unlocked, but at that time, it's not being sold. Okay, so it doesn't have a selling pressure effect in the market. Now, if you were to look at when the team spreads all their tokens across insiders and themselves, and also you enable the market making deals and these OTC deals and all this stuff that happens in the space, that's where the tokens get released and people are dumping that forever. Now, you look at not forever, but for 5 years. They dump it for 5 years. So 5 years, you got selling pressure in your head. 5 years, if you go up in price, you just have more tokens released, they come right back down in your head. And this is the problem that a lot of projects get trapped into, is the vesting schedule. And if you do very well, then you got more tokens coming out more valuable. People just dump on you, and you can't get out of the trap. You're stuck. Okay, so this is kind of painting yourself into a corner if you're Ondo. You know, you're in a situation where literally everyone's just going to be dumping, and you will kind of themselves maybe in that case as well. Now let's think about the point of holding a token. What does governance actually do? You got the DAO treasury, so you can help manage that. You got some lending parameters, but you're really not changing tons of the economics of the protocol. You got contract upgrades, big deal. So holding a token, what's the point of it, right? So the question you want to ask is, let's say I hold Ondo token and somebody does it, and we're both using the system. Why am I more incentivized through another person? We're not. We're not more incentivized. And actually, of the millions and millions of dollars of fees, nothing goes to the token. So we start thinking about, and going back to thinking about the token structure again here, you start thinking about the cliffs, who's getting it, and you think about what it can be used for. Literally, the token only has a small fraction that went to the public, 1.99%. It's hardly useful for anybody that holds it. And the only purposes I can see right now is exit liquidity for the insiders. That's the only purpose the token exists. That's why the team wants to have a high fully diluted valuation, so they could dump as many tokens on the market as possible, so you can make as much money as possible, so you can extract as much money as possible. That's when you hear the mass extract. That's what's happening. So if this wasn't the case, then I would see the inverse in the tokenomics, right? So some people might disagree, Tony, they're not doing that, whatever. They might not be selling, I don't know. But what I look at is the tokenomics, and it's a dramatic imbalance when it comes to the public, what they can hold in a decentralized protocol versus the centralized. The fact that the team holds almost everything. How is that governance if the team gave themselves all the supply, all the insiders, and public had 1.99%, and the purpose is a governance token? Think about that. That doesn't even have any value pipe to it. Why is it even worth billions of dollars? Doesn't make any sense. And so when you start thinking about things like this, that's when you realize, wow, look at what the market was. It was all fancy branding, insiders dumping on me, extracting from me as retail, not building real products. That's what it was. And that's a bit what this is as well. Now, they can turn that around because they're doing amazing on the protocol. They can start to pipe value towards a token like, for example, Hyperliquid is. They could be doing amazing. And probably will. I bet they will in the future. Let's look at the fee terms by the product. So we got USDY that has no management fee, but it has 20 basis points on redemption. OUSG, 0.15% capped. Okay, it's waived till January 2027. The global markets, the fee terms are not disclosed. And we also have the perps. Okay, these are trading fees. We'll have to see how that progresses. This is something new. Okay, something new. So we'll have to see, for example, all the global markets fee terms, how all that, they make fees off of that, but how all that works behind the scenes, how they progress that alongside the perps, how we make trading fees off of that, how much revenue that generates, that's still to be seen. But the key thing to keep in mind when it comes to tokenomics is this has a token called the Ondo token, of which none of this actually has any real value, pipe back to it, or any real usefulness as you're using it in the system. So why did the token need to exist? For exit liquidity, right? That's when you start thinking about that. Now, let's think about where the revenue actually goes. As I mentioned before, all these products, they go right to Ondo Finance, and then what happens to the holders? Okay, now let's think about a future state where Ondo Finance gets acquired. What's the point of holding a token then? What happens? Do the token holders get anything? Oftentimes, no. We've heard and seen examples of this in the space where you have acquisitions, and the holders get nothing, and they complain. The token goes to zero because it's actually useless, right? We saw that when Pump acquired some company. I forget the name And that happened with their holders. They were complaining. Now, when we start thinking about this, again, if we're going to have a token, why do we have the token? Why does it need to exist? This is a big question a lot of people ask. Why do you need a token? The question I like to ask is, how does the token make the system better? Okay. Now, if we go back to Ondo and start asking about how does the token make the system better, you can't answer that. If you're holding a token, how are you better off as a holder than not holding it? You can't answer that either, because there is no reason, because again, the whole purpose as I see it is to sell the tokens on the market and have exit liquidity. Otherwise, why would you need a token for governance? Do you really need a token so people can vote on your protocol with these, kind of things going on, right? That's more important to you than actually sharing the 50+ million in fees, whatever, that's what I personally like to look at. So you could tell what a team does and how they perceive everything depending on how they act in their actions, is how I believe it. Now let's just look at the valuation. The circulating market cap of Ondo is 1.88 billion. The fully diluted is 3.85 billion, and the float is 48.7%. Okay, now if you still think about how much has to be released, this is almost $2 billion of tokens still to be released if we start thinking about this. Okay, if you look at the fully diluted, and we have what's out there right now, okay, the rest of the tokens available, and keep in mind, these are all going to insiders, largely from the tokenomics that are there, or they go to community, but we know that's just dumped on the market. We know it's market making, right? All that being said, this is all here, and this is all going to be dumped. This is all going to be released, invested, and that's going to be a lot of extraction from the market. Literally about 5 years worth. So you're going to have about 3 or 4 more years of dumping. 3 or 4 more years where if the price does go up and that valuation increases higher, all those tokens those insiders get, they just dump. You want to see a great example of a token that was doing, or a chain that was doing amazing, that was just held back by the investors dumping on the whole market? Look at Arbitrum as a great example. No matter how good the metrics were, the token just sunk because everyone just sold it into the ground. And so when you start thinking about that, this is what happens, right? So no matter how good this protocol does, it might still have a negative connotation because of how the tokenomics are structured, who's getting those. And then when those do release in the market, what do they do with them? And if these are all going to parties that will dump and sell, that's going to create a really big problem in the market, and we're going to see continuous downside in the price, which we do see. And so when you think about value accrual, the business has a lot of assets that are there. 3.4 billion. The token gets none of it. Right? You look on the screen, just governance, right? Governance, voting only. Now, again, when you could see team alignment and greed, when you start thinking about this, and you start thinking about the holders, and also how much cost structure it actually takes to run a blockchain project, right? Look at Hyperliquid. The highest revenue per employee business, I guess about the costs are not that high, something like that relative to the money they make. So when you look at companies that raise millions of dollars, why do they do that? So they can exit on top of you, right? Because you should not need millions and millions and millions of dollars to build some of these projects and protocols and tools. They're very simple to put together in a lot of cases. So they don't require like massive investment dollars in the blockchain space because you actually have a lot of efficiencies on the team. You don't have all the people as much operating these things. Hyperliquid literally has hardly any employees. Pump Fund, hardly any employees. Blockchain projects can get by with much less employees than traditional businesses. So in this case, this is an advantage. Why isn't that advantage being priced into this? Because it doesn't make any sense. It doesn't have any advantages actually with how it's structured. So the value accrual, as we think about it, and as we help structure a lot of tokens for our clients, is you always want to make sure the token has some real use case, has some real value. And if you could pipe value back towards the token and it makes sense and doesn't destroy your books, for example, if you're sending all your money towards a token but you have no money for marketing, then you're going down. You know what I mean? So you got to be mindful of what you're doing with your cash. In these regards, you still want to be mindful of the whole purpose of the token as it exists as well, right? And as we look at this, there's really no reason for it to be there. And so when we think about Ondo and really wrapping up and summarizing everything here as we close out, is Ondo is doing an incredible job of onboarding customers. Ondo is doing an incredible job of developing technology that's going to be used by masses. But it's doing a very poor job of actually structuring its token in such a way that actually drives value for the holders. It's doing a poor job of showing that it's in this market to actually enable the space and all the people within it to have some form of wealth creation and value creation. In fact, it's doing the opposite of that by enabling all the team and the insiders to have all the tokens. And if you don't believe it, then show me how it's wrong. You know what I mean? If you don't believe it, look at the pie chart that shows you 1.99% to public and hardly anything to public, right? And all the rest to all the insiders. That shows you right there. 98% of the supply for insiders. That's stupid. That's going to lead you to zero. And so that is really what's going to be very troublesome for this token and this company as time goes on, is all the pressure on the token from all the systems and how they set all that up. So anyway, we'll end it here. Hope you're having an amazing day. Thanks a lot for your time.